Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcasts, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Hello, everybody. I'm Mishkin Santa, your host of the Essential Tax Podcast. I have here today with me Jason Kadow. Jason, you want to say hello to everybody?
Hello. How you doing? Short, sweet.
So I brought Jason on because he's very uniquely situated, and the stuff that he sees every day in the topic for today's podcast, I think just the practical experience of it and being able to share that with everyone that listens to the podcast is going to be tremendous. And let me just give some quick foreshadowing here. So I attend a lot of conferences, and I'll be real honest with you. Tax conferences aren't the most exciting things to attend, and sometimes they can get quite boring and drab. But every time the topic that we're about to talk about today comes up, it's just amazing to me. The energy in the room just goes from 0 to like 1,000, and people get so passionate, and they get passionate on different sides of the equation. And I see people that have never made comments or never really participated. They're on the edge of their seat when people are talking about this topic. And that topic is private equity in the accounting CPA industry. So Jason, tell us a little bit about yourself so that we can kind of make sure we know who you are, your firm, kind of what you're doing, and then let's get right into the PE stuff.
Thank you, Mishkin. So again, Jason Kadow. I am the regional managing partner and director of M&A for what formerly is KMA. We have a new name yet. Can't tell it. It's coming out, big secret. It'll come out in May. So with that, so I run a region of about 17 million in revenue, about 100 employees overall. Our firm is right now it's grown to roughly about 150 million revenue, over 1,000 employees, and I can talk about that because it's all about PE, and that's what we're doing. Okay. Family man, 3 kids, 1 in college, 2 in high school.
Awesome.
Love to play golf. Not good at it, but love to do it. It's my way to get away. Been in the industry over 25 years. I've done a lot of tax for a long time, and I agree with you. Those tax concerts are horrible, long, but now have gravitated into the M&A world, and definitely with private equity. And in our firm, that's kind of my job, is to talk to firms every day about private equity. So
that's awesome. That's awesome. You have a very unique seat on the bus when it comes to having those conversations with a lot of different firms. And for the audience listening today, I've been doing tax practice for 22 years now. This is my 22nd tax season. And M&A, mergers, acquisitions, this is not something new. I mean, this is something I've heard about since the beginning. I remember conversations, should we merge with this small firm? This big firm wants to acquire our firm. Should we let them acquire us? That's not anything new. But I think the private equity angle on it is something that maybe it's not new, but it's new to me, at least over the last, I would say, year or year and a half. And literally every day, as one of the owners of the Wolf Group, I probably get an email or some kind of outreach from someone saying, hey, we have a PE deal interested in your firm, would like to talk to you about that. And I can tell you, having talked to I don't talk to as many firms as you do, Jason, but I do talk to a lot of firms, mostly small firms, some middle market, and they're also getting the same kind of outreach, and they also have the same questions. And that's why I wanted to do today's podcast, because I think there's a lot of misinformation or misunderstanding, or there's a lot of unknown, I'll put it like that, when it comes to PE. And I'm trying to find a way to kind of clear the deck. And when I heard you talk about this at the CCH conference in October of 24, I was like, wow, this guy, he's got the you can tell because of your experience that you've got that insight. And so that's why I've got you on the podcast today. So talk to us about PE. What is PE? What's it doing in our industry? What are some basic things that people should know about this, or maybe some myths that people should understand are not true or real?
Well, I don't think I have a day, but that's how long it would take me. Basically, and that's just the last 6 months I've been, really truly doing this. What is PE? Is an animal that right now is uncontrolled, right?
Okay.
And the reason why, and you brought up a lot of great points, right? PE usually went before they, a few years ago, they went for the big guys, right? They went for everybody 100 million or more, right? They got rebuffed a lot. Then now they looked, hey, let's go to the 50 million, got rebuffed. Now it's 20, 10, 5. I know deals that people are talking at 5 million, and they want a $5 million firm to be a platform firm. It's crazy, right? The problem is that PE is kind of like cattle. That's what they say, right? They all come in, they all follow each other, right? And that's what they're doing in our industry. And the best to summarize it, and I'll say the private equity group that we're with, the leader of that said to us, basically, everybody that's out there right now, right? They understand a couple things. Number one, we had a staff shortage, which is driving, rates up, right? So they're kind of going into a business where rates are going up and staffing is going this way, right? So with that, they see the ability to make more money, right? And that they're really coming in to our industry. Now, I think that's a short-term look at things, right? But I think long-term is, I'm surprised it hasn't come in a long time ago, probably because the people in it, and we could talk more about that, of which I've really understood, the people are the important thing, right? But they're all about the transaction. Okay. It's about the transaction. It's all about the transaction for them. For us, we look at a relationship. So accountants are about relationships, right? And right now it's like a cross, right? And it's really hard because the more I talk to firms, it's all about the transaction. All these it's all about the transaction, right? Numbers, this, that. What they don't do is they don't care about, and they do, but they don't express the care about the firm, the relationship, the people, that the clients, the communities, the people they have, right? That's not there. And when when I go out there and talk about that, that resonates different than a P, and you have some sales guy that just goes out there and sells. And I think that, in a nutshell, is changing our industry. And I'll be honest, and there's things I can talk about more to explain, but our industry right now is going through a huge change, right? And I feel there's going to be a huge consolidation. Private equity has a lot of dollars. There's a lot of older partners that are looking for an exit. A lot of younger partners are like, what is going on? Like, I don't have control. Like, what's in it for me? So there's a lot of questions right now. And I feel there's a euphoria right now, around private equity. It's going to last a few years. But then there's going to be this like, oh my gosh, right? What is going to happen when you peel away the onion far enough, and all of a sudden you get to the core, and we're going to be sitting there like, oh, not everything worked, right?
Right. Okay.
And that's the biggest thing and one of the things that I want to talk about more is what people should do when they want to get into this, right? If they're looking, and it's not just private equity, the traditional firms are also being very aggressive as well, right? The best thing about it that it's happening, Mishkin, is that the prices for firms are going up, right?
Okay.
So there's more value. For how many years, right? And I did a lot of M&A before. We've bought firms prior to. It's always 1x earnings, right? That's no longer the standard, right? It's now on EBITDA. There's a lot of things that go on, and that value for what firms are getting paid is going up, right? And that's a good thing for our industry. It's a good thing for the partners that want to exit, and I think it's a really good thing for the younger future partners, right, of firms, that they can recognize that value. So I think that's really good for private equity, but private equity is changing our industry, right? Good or bad right now.
Okay, so let me ask you, because you brought up some really, really good points, because I've heard the multiples, 5x, 10x. I've also, my wife the other day pointed out like a Reddit thread about one of the really big middle market firms that went under a PE deal, and kind of what they're experiencing during tax season right now, and basically the post acquisition operation implementation, and how that's creating havoc with their fulfillment for through the upcoming tax industry. So let's just talk about the two things that you brought up, though, which is the questions that you need to ask, right? What if you're interested in this, which my firm belief, and I told this to my spouse the other day, it's not if, it's when. For a lot of firms, I think you're just,
I agree.
It's going to happen. So if you're interested in this, which I think you should be, I think you need to listen to your options. And I would tell, it's just being the lawyer in me coming out saying, you got to, listen to everything that's on the table. But what questions beyond the transaction, because, the offering of the multiple and, the structure and all that, I think you talked about, like, that's, people have blinders and they focus on that. But what questions should they be asking? And then what due diligence should they do? How should we think about people? Because I agree with you. I think I look at it kind of in a way like, hey, there's opportunity here, because they want you, they want your people. And now if your people go from being in a firm that's, say, 50 people serving maybe 1,000 clients, and they get into this PE where they're serving, 5,000 or 10,000 clients with much more people, to me, there's more scalability, there's more opportunity there. You got to look at it that way. Now, some people may get eliminated. Don't get me wrong. I mean, you may have some redundancy there, but am I looking at this the right? I've asked you a lot of different questions here, so I apologize if I'm over.
Yeah, you got like 20 questions there.
You know where I'm going with that. So I'll pause. I'll let you go ahead and try to answer some of those.
Well, okay. So the best question is, what should they ask first, right? Okay. And I think that's probably the biggest thing that a firm needs to go in is, why am I doing this? Number one. Right? What's the reason why we're doing this? Is it the right or wrong reason? Okay. Is it for the money and only money, or is it to make the opportunity in our firm better for our people? Right? That's number one. Why are we doing it? So that's the big question. And I'll be honest, a lot of firms, because they're getting berated so much every day, emails, phone calls, texts, by private equity or firms or salespeople, a lot of them aren't even thinking about it now. They're every time I talk to a firm, they're like, oh, we even haven't discussed it yet, or our executive committee, well, we touched on it. If you're a firm of $5 million or more right now, and your managing partner or executive team hasn't talked about this in great depth, you're doing yourself a disservice, period. Right? Okay. You need to be prepared for what's coming. If you want to do it or not, that's a decision to make, right? But you need to be prepared. So everybody that's out there should be listening right now and say, hey, I need to have a meeting if I haven't, and talk about it, right? Okay. Get everybody's feelings. That's number one. Right. Number two, and I think this goes into like the differences out in the market right now, right? So number two is, who am I going with, right? And I look at that and I say there's three different versions out there, right? So on one side, you have the version, what I'm going to call the private equity model, right? Which is, we buy the firm, they buy 90%, have a little equity, and they keep operations to themselves. I mean, back office to themselves, but everything else the firm keeps doing to act like they're independent. Okay. That's one model. I think then you have the traditional model, which is all of the large firms, right? 50 and down, right, to number one, right? They have the traditional model. They're all out there. And then there's a hybrid, which kind of what we follow under, which is a combination of private equity with the traditional kind of face, right, of who we are. So that's the second thing. Ask, what type of model do I want to get into, right? What fits me the best, and the people I have. And it's always about the people. It's always about the associates you have is number one, you should be always thinking about. And then from there, you got to ask, which I think is the biggest thing. And as I go to talk to every firm, I said, I have a process, right? When I talk to firms, and for my process, I want to know the big things: mission, vision, and culture, right? Those things have to align with who you're going with. And if it doesn't, it's not going to work, right? We always talk about that, but here's the thing. It just always doesn't happen, right? And that's, for me, I believe in it so much. Our firm, right, believes in it so much that we feel that it's, we take 2, 3, 4, 5 meetings to understand who we're talking to, right? And they understand us before we even exchange numbers. And that's different, right? Because a lot of them, it's all about numbers. I was on a firm on Tuesday talking to them. And the first thing he asked is like, well, he's like, you can give me a multiple, right? I'm like, no, I don't even, I said, I don't even want to talk numbers until I understand who you are and why you want to do this, right? And your people. Because that's what makes more important to me, not all the other things. Because if the people don't work, the deal's not going to work, right? And that's hard. I mean, we turn down more. You know, I consider myself kind of like the gatekeeper. We turn down more than we want to take, right? And
so that's
all about the process.
Yeah, okay, got it.
You know, so that's the biggest thing is you have to ask. Now, fast forward, right? Due diligence. The best thing I can say is this: it's like having a colonoscopy. Period. Okay, so if you haven't had one and you go through diligence, that's what you're going to expect, right? It's horrible, right? Every person that goes through tells me it's horrible, you know, and there's no way to make it easy, right? And some are worse than others, right? So it's a process. It takes anywhere from 3 to 6 months, right? It's a lot of work, but that's not the hurdle that you have. The biggest hurdle is integration, right? Now you get into a firm, and how do you integrate, right? How do you, is it just the back office? For us, it's everything. So what's that process like? Is that firm prepared? The biggest thing I see right now talking people is private equity right now. They do a one-off, right? And they have nothing. They don't, it's like, oh, go do this. And they say, go buy more firms. Well, you're like, oh, great. But how do I integrate them? Right. And I mean,
that's the easy part of buying them. The hard part is then.
Yeah, right. It's putting them together, right? And that's the true value, right? When you put firms together, and I could go on and on about why that's valuable, but that's hard. That's the hardest piece. Convince an accountant to change. Good luck, right? That's just like an oxymoron, right? It just doesn't want to. This doesn't happen. So you have to sell them on something bigger. And if they're not focused and truly believe in the mission, vision, a culture of what they're doing, of why they're doing it, it's going to be hard to do that. So that's in a nutshell. So private equity, yeah, it's fun. There's a lot of stuff going on, but there's a lot of little things that people just don't realize, that the granular things I say that is right now is slowing everything down, right? Otherwise, private equity would have bought everybody right now. But there's these things right now in our industry that just are little roadblocks, right? Some are bigger than others.
Right. So quick question on the due diligence process, because Tony Nitti, when I was at the CCH conference, Tony Nitti brought up a great point, which is what is the PE actually buying? And so, for example, the Wolf Group, we're an S corporation. And so under that due diligence process, they would want to look close to see, like, have you blown your S corporation by doing something, by not following one of the very stringent rules that the IRS has in the code? Are they buying an S corp? Or are they buying a C corp? Do you see that a lot in the due diligence process? Does it matter in the end result? I mean,
everything matters, Mishkin. Everything, right? Okay. So, but when you boil it down, right, to just brass tacks, the biggest thing is future cash flow. Period. Right. Everything else, yes, you want to verify, triple verify, all the other stuff you just talked about, right? And that's what takes the time, right? But I mean, a lot, again, this is my experience out there. It's not what we believe in, but a lot of it is truly about how much revenue they're going to bring in going forward and how fast can they add more to that. And it's revenue and EBITDA, it's earnings, because that's what everybody trades on, right? So that for them is the biggest thing. Now, it's not all good, it's not all bad, right? So it's understanding our industry is going to change a little bit because of that, right? When I used to do deals, it was a lot different than I do now, right? The amount of due diligence we do, the things we have to look at, to satisfy a private equity group is unbelievable, right? I mean, their standards are so much, more than what I used to do. I could look through stuff in a couple days. Now it takes, you have 10 attorneys and 5 people in a firm doing a Q of E and back in IT and insurance and HR, and I could go on and on and on, right? I mean, you're getting people, like, we send out lists. It's hundreds of things that you have to provide. It's crazy, right? But that's common now, right? And for everybody, it's the same thing. And yesterday I was talking to a firm. He just kind of laughed. He's like, "Well, I have a whole share file folder that you can just go dump. There's nothing, because I've been through 2 PE, LOIs." He's like, I have so much stuff in there. It's like, if you don't have everything, it'd be unbelievable, right?
Right.
So it's a process, but can you make mistakes? Yes, right. But bottom line, it's all about future cash. It's understanding their cash flow, right? How they came up with that EBITDA, and can they have future, what's their future EBITDA, and can they grow that future EBITDA, right? And do they have the people capacity to do that?
Right. And I think in my head, it's like, again, going back to my comment about the more resources and the more availability you have, it's like you're now igniting that ability. Like, if you have that scalability and that ability to bring in more revenue, but it's done through the PE, then I think that makes you super attractive as a firm. Let me ask you, what are some other things that would go on the resume sheet that would make a firm very attractive? So, for example, at the Wolf Group, we're part of the Nexia International Network. It's the 8th largest accounting network in the world. So we've got that on our resume sheet. We don't do outsourcing to India or anywhere, but I'm assuming maybe if you had that function already set up, that might be an attractive function. Remote versus hybrid versus return to office. What are the things that maybe would go in the pro column versus the con column, as far as making yourself more attractive and getting that multiple higher?
So I think, okay, so the biggest things that I look at when we look at firm is, number one, what's their depth, right? Okay. So how is that firm for their people, right? Is it all concentrated at the top? Do they have a good bench? Do they have people in the middle? That's important, understanding that, right? Do they have capacity, right? That's the thing. If their firm may have no capacity, then you're like, how can they grow, right? 3 is a lot of firms now, if they're bigger firms, they all have offshore, right? And from there, has that firm had any experience in offshoring? Do they know how to integrate the offshore people into their work? Right? Okay. Have they introduced it to their clients? That's a big one, right? And that's as something, as we talked earlier. I mean, that's part of the whole staffing mix that's out there right now. That's really important. Then the last thing, I mean, again, as I look at I go back to it, what's their culture like, right? What are the things? Do they have a good culture, bad culture, right? How are they run, right? And that's that's so important. I can't tell you, right? I mean, it's not all about the money sometimes, right? But it's having the right fit, having people that think alike, moving forward. Is really important. I mean, before we joined our group, I interviewed over a dozen private equity firms, and everyone was different, right? Mm-hmm. And trying to find that right fit is the hardest thing. Who fits you the best, and who are you going to align with? And do you believe that those people are the most important? So that is, the culture. I mean, culture. I hate to say it. I mean, it's like one of those things, you go there and you go to a tax conference or any type of conference, and they have all culture there, and you're like, oh, why am I in here? What they mean to talk about the same thing. But when you go through the process, it's so important, right? And it starts at the top, right? That's the biggest thing. I'm blessed. We have a great leader at our firm, right? Our CEO and president are awesome, right? They're leading our ship. Everybody's on the bus, moving in the right direction. It's so nice to have. In some firms I talk to, that's not it, right? Extremely disjointed, right? The left doesn't know what the right is doing. That's scary, right? A lot of firms are siloed, not working together, So those are the things that, as when we start looking, right, finding those things, right? Those are the little things that really, as I tell firms, can determine if you're going to get a multiple of 5 or you're going to get a multiple of 10, right? Or where you're going to fall in between is as we start to learn about you, how that is going to interpret to value for you.
So if I'm a listener here and, again, I think one of the first things we said here, or what I said is this, and you said it too, you need to start having conversations internally, meetings about this. And if you're mapping out a checklist of how to make yourself, if you're going to, actually go through the process, right? You talked about mission, vision, values, making sure everything's in alignment. It sounds like leadership team's a big deal. You mentioned a couple other things, but let's talk about timeline. Let's say we've had those meetings. We've got the leadership team airtight. We've done the mission, vision, values. We got all of our due diligence documents, ready to go. We kind of squared away the things that make us valuable. So, let's say we get, we've interviewed the different PE firms. We decide we want to go with them. You're saying due diligence is 3 to 6 months. So is it letter of intent first, due diligence, and then like after 3 to 6 months, it's done deal, and now we integrate? Or give me
right.
Yeah.
So no, that's so kind of walk you through, right? Let's say you have a firm, you decide you want to go through the process, right? So then you're going to slowly go out there and you're going to interview people, interview firms, private equity groups, whoever, right? That'll probably take you a couple months if you're seriously say, I'm going to do this.
All right.
From that point, then you will let some information, you have your NDAs out there. You'll let some information out, not a lot, right? You'll let some out. From that, okay, then firms will, go and send an LOI, right?
Okay.
Once that LOI is signed, you're probably looking at 3 to 6 months of due diligence, right? And that's going through all the things we talked about. Then after that, then you close, right? And then depends upon who that acquirer is and how, well they've got ready for that acquisition. It could be right away, it could be partial, or it could be put off, right? So, for us, we've done 10 acquisitions to date, got a few more happening this rest of this quarter. You can't do them all at once, right? So at that point in time, you got to schedule them out. So we're probably 3 to 6 months before we actually integrate them, right? But you got to have time for your teams to be able to do that. And you don't want to take on too much because you don't want to overload your people. Again, it's all about the people. That's the biggest thing, right? You kind of have to thread the needle anytime on an acquisition, is because you have to weigh the focus of profitability for the firm and the integration, right? So those two things got to correlate and go in step. You can't have one and then forget about the other, right? Because if one's not going to be successful, you kind of got to do them together, it's like threading the needle, I say, right? And it's very hard. But, firms that I think are going to be successful in the long run are ones that are going to be able to I'm not going to say master it, but are going to get really good at it, right? And again, go back to those are the things that the questions firms just should be asking, right? How many deals have you done, right, in this space? How long is the due diligence piece? How long is the integration piece? How does that work? How is it going to disrupt my people? All those questions need to be asked before they pick that partner, because those are hugely important, right? And I'll be honest, very few firms ask that. It's all about, what multiple am I getting? Or why am I not getting this or that, right? And, I'll be honest, we've done 10 firms. Not a single firm has hit the multiple that they said. After a QV, not a single firm has hit the multiple they said they did. So
it's interesting.
Multiples are important, right? But in the end, earnings are the most important, right? Okay. So, but again, it's all about the people, and you should be asking the questions that affect your people, right? Because what you don't want to have is this, Mishkin, is you don't want to go through the process and you're not upfront with your people and giving them the expectations, and the firm should give them expectations, right? That's one of the few things that, right, when you talk to the firm, what are my expectations when I come in? When we join you, what are the expectations, right? And realistic expectations, because you are going to lose some people, right? And given the market, it is now become, as we talked about, I think it's now employer market a little bit, right? There's a lot of candidates out there. I'm seeing more candidates now than I've ever seen, last 5 years. Are they all good? No, right? But there's a lot of good candidates, right? What we have in our industry right now, and I'm kind of going off on a tangent a little bit, is that you have a lot of the larger firms and the better private equity firms are pushing everything offshore, right? The work that can be done easy, processed, right? The compliance work is getting pushed offshore. From that, the people that are in the U.S. are now being asked to do things that they've never asked to do, right? They're asked to review returns, manage people, manage clients, business develop. A lot of them don't have any of that experience. So think of a firm once. To give you an example, I think this is part of our industry problem. And I think not a lot of people are talking about it, but I think has to be, is when we train people, we train them all. When we have a young staff, we give them all the training on all the necessary critical, tax, CAS, a test, all of that, right? Okay. That's what we focus all of our time on, all the CE on. How much time do we spend on talking, right? On communication skills? Very little. How to be a good manager, how to be a good service provider. We don't. And that in our industry is going to be, I think, the biggest moment, aha moment for everybody coming through is going to be like, we're going to have to change our industry dramatically and how we do things because of the way offshore comes. And there's this thing called AI that I don't think anybody talks about out there.
No.
That's going to be a bigger change, right? So as an industry, private equity, and this is the good thing, private equity is pushing us to think about this stuff, to go do some of this stuff, right? To make these changes. Ultimately, not every firm's going to. They might not want to. They might not be able to afford to do it. Ultimately, they're going to get caught at some point in time, and they're going to have to make a big decision, right? Where a lot of firms, they're going to have that decision made, and they're going to be the leaders of our industry, not the followers, right? And that's the biggest thing, is understanding our people and how they're going to change, right? And it happens. I mean, I give you examples of it where the expectations are a whole lot different for a private equity backed company, right? Versus a non-private equity backed. That's all there is to it. It's the way life is.
You've made some fantastic comments, because I've noticed that some of staff, especially the newer generations, they have a real big problem with actually talking to a client. I can't recall how many times I'll shoot a Teams message or an email saying, "Did you call the client, or are you just emailing them?" Or some of them would even just text message a client. I'm like, some of our clients just really want to talk to like a live person, and I think if you did that, you would save yourself like 30 emails and misinterpretation and missed expectations. And I think there's a real lost art form there in our industry for communication. And I think in the same vein, management skills, just because, again, people want these shortcuts to communicating that have kind of popped up in these newer generations. And I think when you look at, say, my generation and older, we still have a very different mentality about how we go about that. So I think it's incumbent upon our generations to be the ones that help train, say, the younger generations on how to do that. But like you said, I don't think there's a real big focus. I think you're exactly right. There's no real focus on that at all. We're doing our training week right now, and I can tell you, I don't think that there's any training modules that we're doing about how to communicate properly with the client, how to manage your people or things like that. I think those things are being missed left, right, and center. So I think that's a fantastic point. I also love the point you made about what's going on right now here in 2025 with the industry of, there's a glut of people available. We haven't seen that in a very long time, but do they have the right skill set for what you're looking for? Maybe not. And then you're kind of saying, well, we're not going to go with that person. We now have more options than we've ever had before. then the hiring numbers are different than the employment numbers, which for the first time that's decoupled. So that's a really weird trend that's going on as well too. So this is an area that I think, you know, people need to pay more attention to. Shifting gears for 1 second, I've got kind of a side question for you here. So the Tax Cuts and Jobs Act of 2017 is sunsetting, and they're already proposing a lot of different, you know, changes to the tax code. A lot of, you know, the House Ways and Means Committee had 50 different topics that they wanted to go through. You know, do you see the potential changes to TCJA or the TCJA extension kind of impacting PE deals? You know, will there be a potential like point where PE is like, wait, we need to see kind of what the tax changes are, because that might change how we do some of our deals? Or do we feel like that doesn't have any impact at all? It's still full steam ahead.
I would say, you know, everything impacts it, right? Because private equity, they want to get every little inch they can, right? So
Right.
every dollar possible. So I would say yes. I mean, are they all sitting there waiting to see what happens before they do deals? No, right? Will it impact it? Yes. Everything that out there impacts value, right? And how you price deals, and you know. So here's the biggest thing, though, and I get that, but the thing that I look at is more of a granular, like, so how are the firms that you're going to acquire, how are they positioned to take advantage of the tax changes?
Mm-hmm.
Do they have the capacity to recognize those possibilities, those, right? Can they go out there and communicate to their clients the changes? Do they have the people to be able to go do that work that's going to come with it? So that's where I think firms are going to, especially us right now, we look at that, right? We look at this thing. How are the firms positioned internally to be able to change, adapt, to look at those things? That's probably the biggest thing that you're going to look at. Not so much, I get the other thing, but that's such at a high level. I really look at the granular piece and say, hey, how are the firms operating? Can they do that stuff? Do they have the right people that can understand? And that's the biggest thing. You know, people ask me, why did I, you know, get into a larger group? The biggest thing is, you know, the need for services and having more people to be able to research this stuff, spend the time, understand it, get those opportunities. When you're in a firm of 30 people or 100 people, you just don't have the resources to do that, right? You're all busy doing stuff and holding, you know, 3-4 hats. You don't have time to sit there at 10 o'clock at night to go read tax law, right?
Right.
Larger firms have people that have that ability, right? You have people that are, I'm going to call corporate employees, that have the time and effort to do it. They're not sitting there generating billable hours.
The national office guys, right? The ones that just sit there and read the regs.
Yeah.
And give opinion papers and all that stuff. Yeah, I hear you.
So that's the change, right? I mean, those are the things that I think on a private equity. I mean, just if you're just a good firm, it's not just private equity. The large firms understand this too. When they're looking, is how is that firm positioned, right? Are they heavy tax? Are they heavy audit, right? What's that makeup cast? I mean, what are the hot areas? What are their client base? I mean, I could go on and on of all the things we look at, right? When we do our due diligence on a firm, right? But that's just one area. And however it comes out, it's going to come out. There's really nothing you and I can really do to make a change. You know what we can do? We can figure out how to make more money from it, period. Right. And that's the biggest thing. That's what we can control.
So I'm a huge fan of the answer that you just gave about the granular kind of, you know, are you positioned to take advantage of and understand how those changes can help your business and drive your business? I remember when the Tax Cuts and Jobs Act of 2017 came out. To me, it was we do international tax, and to me that was the great equalizer, because I saw all these individuals, you know, maybe in their 30th or 40th year of tax practice, that were advising on controlled foreign corporations, and they simply could not grasp all the changes from TCJA. It was a great equalizer because they couldn't figure out the transition tax, they couldn't figure out the GILTI tax. And I told a lot of my younger staff, I said, here it is. Here's your opportunity to make your name, because now you can know more than someone that has twice as much experience than you, just literally overnight. And you can take advantage of that if you just really focus and understand what those rules are saying, how that impacts our current client base, and how to market that to potential future clients. And I saw a lot of those older practitioners just drop like flies, and because they could simply not adjust to the new tax law. And I think I think from what I'm seeing out there, it's not going to be as tremendous as that in this next go around, but I think you're going to see a similar type of equalization where there may be some new things that come out where people that have been practicing in certain areas for a very long time, if they can't adapt to those new rules and that new understanding, they're just simply going to have less value. And I would tell a lot of the younger folks out there that there's your opportunity. There's your opportunity to really make your value, increase your value as a people, as people in the industry. And so I think the firms that can wrap their arms around what's going to happen next, and then subsequently the people underneath that do that as well, will be the big differentiators.
I agree 100%. I mean, I couldn't have said it any better.
Yeah, well, thank you. Let's talk about real quick. Well, I want to go back to the post-acquisition kind of implementation. Is there a playbook that you hand, like, okay, so hey, Jason, we're part of your group now. Is there like a kind of a playbook, like you're the general manager, I'm the head coach, you hand me the playbook. Okay, Mish, I want you to run these plays going forward. This is how it's going to work. Or have you developed something like that yet? Or I think you're saying firms that can do that very well, that post-implementation process, are going to be the ones that make the biggest mark. And is there something like that out there where it's like, here, this is what you need to expect. This is what we expect you to implement. This is how to do it. And then secondarily, I hear a lot, there's the acquisition, and then 5 years later, there's another kind of a turnover event. Can you talk a little bit more about that and kind of fill in our audience about that activity as well?
Okay, let's talk about integration. I'm very familiar with this because I sat at an 1.5-hour call yesterday on integration of all the firms we had just for this meeting. I'm like, I know he's going to ask me something about this, so I better know what's going on. So for us, I mean, and again, I know some of the other firms, right, that we all do, most of them do a good job, but I just can talk for us. I mean, I have an awesome director of integration. She's awesome, right? That whole team is awesome, right? They have a list for everything, right? You go through and there's a whole checklist for every single area, right? Someone's assigned to do it. Here's what needs to be done. There's a whole playbook. So that day that firm comes in, or even before, they get that large, massive checklist and says, all right, here's everything we're doing. Right.
Okay.
Here's who's responsible on our end, who's responsible on your end. Here's the dates that it needs to be done by. Here's, completion, anything issues. And every week that goes over, right? And that just on a corporate level for us, right? Plus we then take out and we then go on a granular level between teams, between the acquisition that we just, the people we just acquired. So yes, and I know the bigger firms have that, right? And if you're going to be successful, you have to have those teams ready, right? That's the biggest thing, because if you don't, it's a disaster.
Right.
Period. Right. And what you don't want to do, and unfortunately, we've had to do this, right? We've had to say, you know what? Hey, we couldn't bring in firms because our backlog was too much, and we just didn't think it was appropriate for you to sit out and for a year out there and do it, right? So, and go on your own. It's just not who we are, right? We care about you, and we want to make sure you're part of our team, right? And with us as one firm, not just off on your own. That's just not who we are. So you gotta know yourself, right? And that is a process. And if you don't have, and again, going back to the firm, every firm should ask that. They should be like, I want to see what you have for integration, right? Tell me about it. I want to know about it. I've done a lot of these, right? And not these, but I talked to a lot of firms. We've acquired a lot of firms. You know how many asked that? I can count on one hand.
Oh, no.
Yes. Biggest, and then I just laugh and I'm like, I'm like, good luck. You're going to have experience, a lot of fun, right? And we're going to help them through it, but that's where a lot of firms are struggling. And I talked to other firms that have just been acquired and stuff, and that is probably the biggest area of hiccups, right? Not understanding how that integration goes. What's the expectation day one? What's the expectation 6 months later, right? Yeah. So that is important. Let's talk about the elephant in the room that everybody wants to know about, and that's the question nobody knows about, right? What happens going forward? Well, we kind of see, I think Citron Cooperman was the firm that just did the first twist, right? From, private equity to private equity, right? So I think that is, they've kind of set a standard, right? no one really knows all the details. But it's the unknown, right? And every firm asks that. That's one question every firm. And it's a good question, but the problem is we just don't have answers, right?
Mm-hmm.
But here's the thing, okay? And this is kind of like I'm gonna just talk about private equity really quick, right? And that's kind of what we're talking about here. Biggest thing what you have to understand is who's your partner, right? With private equity, do you have a partner that wants to be hands-on, right, and get into your business, run your firm, or are you going to have someone who is hands-off, do not disturb, guide, and be a financial partner? I can say this: our private equity group is awesome. I'm just not saying it, right? They truly are. By their actions, they do what they say, right? And that's allowed us to have the ability to do what we need to do as a firm because of how they act and the guidance they give us.
Okay.
That is extremely important, right? So as I tell all the firms that I talk to, right, and I know all these people out there, everybody wants to know about the second term. It's going to be probably a big financial windfall, maybe not, right? But the unknown is who you're going to have as a financial partner. That's the biggest thing. I look at our private equity group as a financial partner, right? They're there to help us grow, and we both should benefit. They're not there to run us and make the decisions because a lot of times they don't really know our industry as much as we do, right? So whoever we pick going forward has to be a good financial partner that understands that, right? And allows the accounting firm to do what they do best, but help them, guide them, and give them the resources to allow them to do that. And I think that is going to define the next 3 to 5 years in our industry as firms go through that. That's really where the larger firms, and they're all going to do it at some point in time, either they're going to go private equity, take private equity money, or going to do an ESOP, one of the two, right? I don't think very few are not going to do it, but it's who that partner is and how is that partner going to interact with them, right? Does that firm have the team in place to run it? Again, I go back, you got to have a strong president, right? You got an executive team. We do, right? We have leaders that lead, right? That people can follow. That's very important. If you don't have that, then that private equity is going to come in, and I'll give you an example. I had one firm when I was originally talking, they said, oh, we have a board of big four people that we came in and we put this board together and they're going to come in and tell you how to run your firm and do it all things. And I just said, well, scratch that. That's not working, right? That's like, that was the biggest, I'm not doing this one, done, period. Right. So that's the biggest difference, right? Is it's understanding, and it's hard because private equity has been doing this very long time, right? They're the adults in the room and we're the kids. But sometimes the kids know more than the adults. The adults don't want to admit it, but the kids sometimes are right.
True. Yeah.
Right? So I don't know if this is going to be the case, but right now it looks like it. Right? Mm-hmm. So I don't know, but the opportunity is coming, right? And it's going to happen, and firms are going to realize this, and it's this, I'm going to say the standards will be set, right? And everybody's going to see it and everybody's going to follow and want to do it. And that's going to even give more craze to what we currently have, which is good for the industry. It's good for the people because it creates more value for the people that we have, right? So I think it's good, but it's an unknown, right? But find the best partner, right? That's the biggest thing. And, we're lucky. We have a great partner, but you have to find a really good partner. I mean, because otherwise that deal's going to go to the crapper. Right. And you're going to be like, why did I do this? Right. And that's not good. Right. And I go back to it, culture, people, right. Community. Those are the things that you should be looking at, standing for. That's when your private equity comes, or whoever your buyer is, they have to align to that. Right. They have to, the core, because you're not going to tell your people, oh, we're going to this right here. And you got to change everything you believe in. How do you think your people are going to last? They're going to all bolt, right? And next thing you know, your firm is just not going to be there. You're going to lose clients and people, and just doesn't work, right? That's why that fit is so important, right? There's something behind that, Mishkin, right? That people have to realize. This industry is about people. We're a people industry, right? And that's who we need to protect. And that's who our lifeblood. Without the people, we're nothing.
Yeah, I agree wholeheartedly. Fantastic messaging there. I'm cautious of our time today, so we could go on and on. I could probably ask you 50 more questions on this stuff, but let's wrap it up here. Any concluding remarks? And then also, will you share some links for your firm so people and tell us how to get, if companies want to get a hold of you or people want to get a hold of you to maybe talk to you a little bit more about this stuff, or want to really speak to your group about PE, will you share some links and how they can get in touch with you? We'll post those in the show notes. But talk to us about how they can get in touch with you, and then any concluding remarks.
Yeah, I'll send you my stuff so that the firms can talk. And again, I have no problem just, if it's not talking about us, just asking questions, right? I spend a lot of time just talking to firms. I've got a number of firms, a couple dozen, where I've just went there and talked to their executive teams, right? With no, nothing entailed, right? I'm not sitting there as sales, but just to give them the advice that they need, right? I think it's a good steward of the industry, right? To have that knowledge to be able to go in, because a lot of them don't know. Like you said, there's a lot of false information out there, right? Mm-hmm. And I think people need to know, and I'm very open and honest about, hey, the good and the bad. So, but to summarize, like I said, our industry is changing, right? Private equity is just one of the things that has caused us to change, right? And it's accelerating a lot of the changes in there. If firms are looking to do it, do your homework, right? Ask the questions. Make sure it's the right reason why you're going to do this. If you're just doing it for the money, you're doing it for all the wrong reasons. The money's great, right? But it's the wrong reason, right? And that's the biggest thing. And then ask the questions that you need to ask, not just part of the front part of the deal, but how the whole deal is going to come out. What are my expectations? What am I going to do, right? What's my people going to do? How's the culture? Those are all the things that people need to ask that, unfortunately, right now, they're not asking, right? And that's the biggest thing. And we talked, right, at CCH, my presentation would change dramatically based on my last 6 months of talking to hundreds of firms, right? And saying, hey, do it for the right reasons, right? And it's fine to stay independent. It's perfectly fine, right? And great that our industry is going to need that. But at the same time, understand, hey, there's opportunities out there. And yes, should you explore them? Yeah, but doesn't mean you have to do them, right? So a lot of change is going to happen, right? As we go through the next few years, it's going to be hills and valleys. Take it how it is. Have fun. Enjoy it. We're in a great industry. We have great people. Just remember that.
Awesome. Well, thank you so much for coming on the podcast today, Jason. And we'll make sure to get everyone, put the links in the show notes if anyone's interested and wants to talk to Jason further about this topic.
All right. Thank you very much. Have a great day.
You've been tuning in to the Essential Tax Podcast with your host, Mishkin Santa. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.